All right, everybody, here we go. Welcome back to Stocks by the Numbers, and I wanted to do a quick update after a great earnings report for Nokia, symbol NOK, listed here on the New York. You guys remember this one? We haven't looked at this in a while. I think I did an update maybe like around here when the stock was selling off. As we approach those lows here, the stock broke below $3 and then has really been on the up and up since then throughout all of 24, and now of course starting off 25 doing pretty well. But if we go back and we look at the earnings, because in my opinion, when we looked at the actual fundamentals and we looked at the quote unquote fair value as I give it, I came to the conclusion that Nokia still undervalued even after this run up here. And I think we were saying conservatively, if we broke up and out and the company continued to post some decent earnings, we could easily see maybe $7 or $8 down the road. Company pays you a slight dividend to own it. But if we go back the last couple of quarters, you can see 9% miss on the revenue here. Big miss, 13% on the EPS. Then we fast forward, we have an EPS beat, but we have another revenue miss. And that's what people were worried about. Them losing market share, watching the revenue drop over the last just like 2-3 years. And now they're contemplating if they're able, are they going to be able to turn it around? Or now are they a stick in the mud and they're one of the weaker players and we could just drive this thing down? But again, Nokia said, let me see if I can pull it up here on the other screen. Yeah, they were saying we did a video back November of 2023 where the company came out and said they were doing big restructuring, right? And they were looking out to 2030, they said, and they were trying to be one of the leaders in the space. And that, of course, was the tail end of 2023. So we're talking about like a 6-7 year plan. But we're moving, and you can see another EPS beat, 5% revenue miss. Last quarter, big miss on the EPS and revenue side. Company drops into the 4 billion revenue mark, and they keep missing that 5 billion. And now we go to last quarter here. This was posted, about 2 weeks ago. And you can see really nice beat on the EPS side, posting 18.8 cents a share. Analysts were expecting 13.7. And on the revenue side, they were finally able to come in above expectations for after a while. And they posted almost 6.25 billion on estimates of 6.03 billion. So they beat that mark by over 200 million, or roughly 3.5%. So very good quarter for Nokia. And again, this is our support trend line here. This was drawn out from the lows back on December 5th, 23. Coming up, connecting to those candles there. You can see the flash break below it, and then it opened the next day and popped back up above it. And technically, it looks solid here, in my opinion. But if we back up, we can see that this was the long-term kind of symmetrical triangle that we were speaking about. Hold on, I'm taking a sip. Oh, yeah. So this was the long-term symmetrical triangle that we were speaking about, right? From the drop all the way down in 2012, and then it rallied all the way back up September 2014. And you can see it's just kind of been staying in that range. So we were heading down towards the bottom of the range. Now we're on the up and up here. So hypothetically, if it does just want to continue, let's say it stays above support, we run up here. Yeah, maybe going into next quarter even, we could see potentially about 5.5. We could see about 5.5. Again, that's if it stays in the range, and then if it wants to reject and start to pull back down. But long term, I do personally still like it. We're talking about market cap 25.6 billion, paying out a dividend yielding about 2%. We're trading sub 19 times earnings, which could be viewed as pretty cheap in this market. I know this is an international company, but look at that beta as well. That's what I mean. That's why a lot of positions like this, I know they had a couple of rough quarters and the stock went from around this level down into the threes. So I can appreciate the fact that percentage-wise, people may have taken a big hit there throughout 2023 before 24. But look at that beta, man. Beta, again, is the volatility of the stock in relation to the overall volatility of the market. You can see 0.17 beta. So that's why sometimes, there's a method to the madness when you're looking at like these slow, steady, under the radar companies, right? Because Nokia, whether it looks good in the chart or it looks good in the numbers, I don't know about you guys, but I don't personally hear much about Nokia. And that's the way I like it, right? We've proven that on the channel already. Look for the quiet stocks, the under the radar stocks, and then all of a sudden, right, the stocks went at 360, now it's at 460, now we might get 560, right? So all of a sudden now you're up 60%, you got paid dividends to own it, and as we say, if it was a long-term hold, then you just paid less in taxes too. We can see, okay, ex-dividend date, February 4th, which is tomorrow. And of course, that's getting paid out on February 18th. Again, big difference between those dates. The ex-dividend date and the payment date. The ex-dividend date is the date on record. You have to be on record owning the shares in order to get paid on February 18th. So that's why sometimes as well, you might see volume start to come into the stock just a couple of days before the X date, the X dividend date, because people want to pile in, they want to collect that dividend. But if we look at the numbers here, company's holding a decent amount of money on hand right now, 6.86 billion. And the debt, it's up here, it's at 4.92 billion. But if we go back, you can see it was 494, but before that, it was above 5 and almost at 6. And now we're down here to below 5, which technically is a good sign. The free cash flow did go down from this time last year. 1.86 billion, down here at 62 million. But sitting here with 6.8 billion cash on hand. So debt minus cash leaves us with like positive 2 billion. We have assets outweighing liabilities in both the short and the long term. Equity was here at 23. We came down here to about 21.5 billion, which technically is the lowest it's been going back about the last 8 quarters. Book value per share sitting here slightly below $4 a share. Stocks at 462. So we're only trading about 1.15 times book right now. But we had the plus 2 billion with the cash overlaying the debt. 21.5 billion equity. So we add that up, that's 23.5 billion. And we just got Q4, so we closed out 24. Revenue technically is down. See, they were up here at 24, 26 billion. Then we dropped to 24.06, and now we're down to 20.79. So that's why a lot of people were jumping ship over the last year or two. But technically, they have been on the up and up over the last several months. So they might be storming back, in my opinion. But what did we say? 23.5, and we add up the revenue and the profit. We're at about 22 billion. So we added to that. See, we're at like 45 billion in change, in my opinion. Market cap right now, 25.6 billion. So we can get close to a double from this point, which of course would put us at like 9.25, which would be massive. But that's why I'm saying, conservatively, if this company started to slowly run up to the top of that triangle, hypothetically, if we potentially get another earnings beat next quarter, we can potentially break up and out of that triangle, especially if basically all markets stay up. And we can ride to that next level. That's why I'm saying, again, $7, $8, in my opinion, pretty conservative, potentially. Just based on, again, the equity, the cash position, the actual revenue they're bringing in. It is down, but they just had a nice beat, and they're technically profitable, right? We technically closed out the year making profit. I mean, they're down, but it's, 8.9% profit. There are worse companies out there to own, believe it or not, in my opinion. And again, I know the earnings were light, but, if you've been following the stock, again, they're talking about completely restructuring and storming back over the next 4, 5, 7 years going into 2030. So, we'll see. And you can also see now that because earnings have been missing, you can see next quarter, Q1 of 25, look at the estimates for the revenue, sitting here at 4.5 billion. Now, hopefully they beat that, because that's a pretty low estimate. But you can see even this time last year, the company reported almost 5 billion. They missed the mark, 5.37, but they posted almost 5. So now we're dropping that estimate down from, what, like 12% of what they reported this time last year. So, I don't know. I would give them the benefit of the doubt. The EPS, as we see, it was doing pretty poorly, but 3 beats over the last 4 quarters. So that's why this is the restructuring that they were talking about. And I feel that Nokia was in a better position when compared to maybe something like an IBM, right? All of my older investors out there. We know about IBM because, yes, it's on the up and up, obviously. But what I was going to talk about was right here, the drop here from the highs of like 2013. And you can see, look, we go into 2018, 2019, and then we finally start to gain momentum. And now we're on the up and up. And this company went through a major restructuring phase here during these like 5 years. And if you spoke to any analyst, they were saying, oh, yeah, they're behind, the competition stepping up, they're losing market share, boom, we're lowering price targets, we're betting against it. And now all of a sudden, it's back on the up and up. So Nokia is kind of in this same similar phase, but I just personally feel they're in a better position than IBM was when they went through their restructuring. For the record, I do not have a position in Nokia. But looking good, looking good. And you can see it just, we spiked up here after earnings. We pulled back. Looks like right to the moving average and then had a nice bounce. And the stock closed up here above the fib, above the moving average. Technically still bullish. If we do happen to pull back over the next couple of days, you could see about 430. But even if it does come down and retest this support, it really should bounce and come right back up. Let's check stock charts real quick. I'll let you go. RSI up to about 55 on the daily. That's not too crazy. Stock came right down here also to the Bollinger Band and bounced and closed above it. Our 50-day moving average has been climbing up nicely over the months. Was down here at about 3.5. Now we're up here at 443. 200-day off the screen in August climbs up from sub 3.5. Now it's up to 413. Right? So if we potentially start to sell off, we've spoken about this in the past, slow climbing moving averages are now potentially new support levels where the stock can drop to, but then bounce off of and find, as opposed to, just cratering down and flash crashing. The MACD looks like it wanted to cross to the downside here and then almost immediately came right back up. And then we dropped here to retest that moving average. Came right to it, and then we had the earnings come out, and boom, that popped the MACD back up. Technically, we're still above, so we could see a bounce back tomorrow. We could see a little 2-3% day potentially for Nokia. Switch over to the weekly, RSI 62.5. Look at the stock, the way, look, we came down and test and broke the 200-day moving average. Took 2 weeks to get back and above it and test it and then rejected, and then boom, we popped right above it and have stayed above it since then, and also have been kind of trending along the mid-Bollinger Band. You can see the multiple bounces off of the mid-Bollinger Band, indicating, in my opinion, it's probably going to remain bullish. Look at that MACD completely flattened out, getting very close, potentially ready to meet up and cross and break through. That's why we could potentially have that run to about 5.5 inside of roughly the next 3 months. Whether it's right now immediately after these earnings, or it's going to be like a month going into April's earnings where it'll start to run up and gain momentum, in my opinion, I think it's in play. I think it's in play. I think it's a decent buy here in the 4s. Obviously, it was a great buy in the 3s. If you've been watching it for a while, if you added over there, good job, congratulations. But I have a feeling that, again, even with the restructuring, I think it's going to kind of just hold steady and at least hold its value. But over the years, I do believe, again, 7, 8, I think that's conservative. We looked at the numbers, right? We were looking at like 9.25. So that's why, I always said, if we turn around one day, Nokia's up to $8, $10 a share. I mean, in my opinion, I wouldn't be surprised. You can see last year we had a strong pivot point here at about 440, and the stock even recently tested it the last couple of weeks, but it stayed above it, sitting here at 462. We'll look at the daily real quick. Yeah, last month looks like about 460, but technically we came up and we closed at 462, right at the new pivot point. Next stop could potentially be 483. And let's see again on the weekly, 522. So that 522 weekly resistance level is very doable, especially since, again, on the longer time frame, 522. Look, that would bring us close to this fib. Looking at the weekly time frame, that would bring us close to this fib. And technically, still about like 6-7% away from the top of this long-term triangle we were looking at. So 522, 5.25, 529 fib, that could be very doable. But again, in the numbers, I do like Nokia. And based off that last earnings report, not too bad. Not too bad. Let's check the news real quick. Nokia picked by DECIX to upgrade New York Internet Exchange backbone. Upgrade the backbone network. Beautiful. Contract with New York is always good. Backbone will be upgraded to 400 gigabit Ethernet using Nokia's optical technology and will be redesigned in a ring topology. Financial details weren't provided. Yeah, I'm sure it's a decent contract though. Upgrades Nokia to buy, boost price target. To 520 euros from 430 euro. All right, so what's that, like $6-7 or whatever? But again, technically that would be a little bit above the range of that symmetrical triangle that we were looking at. So again, everyone went from lowering price targets and downgrading the stock. Now all of a sudden we're potentially viewing this turnaround now and the company in its current state as quote unquote undervalued, and now we're upping. We don't want to hold it now, we want to buy it, and we think it's going to jump up whatever 20-25% more than we thought it was. So that's a big deal in my opinion. Beat estimates, strong growth, both top and bottom lines beating estimates. Solid traction, several segments. Management cost discipline initiatives and growth in Nokia improves the gross margin, right? We spoke about this, trimming some fat, doing a little belt tightening. Improvement in profitability and strong growth in free cash flow are tailwinds. Net income 813, 867 million. Okay, appreciate the dollar conversion. Against a loss of 33 million. A year ago. Top line expansion, lower income tax expenses boosted the net income. Very nice. Comp profit 1.04 billion. Oh wow, big jump there. Very nice. Net income 1.28 billion compared with 679 million. 2.17 billion up from 1.59 billion. Wow, big jumps here. Sales up 10% from a year ago. Healthy demand in multiple segments. Yeah, last year 21.13. Here about 19.25 billion in total revenue. From network infrastructure, a total $2.17 billion. Okay, up from 1.7. Very nice. Top line beat and revenue estimate. IP networks recorded 24% growth year over year, owing to strength in North America's region, with healthy demand from web scale and enterprise customers. Revenue from optical networks improved 7% year over year. Asia Pacific region, fixed networks witnessed a 16% rise year over year, growing fixed wireless access deployments in India, increasing investments in North America. Mobile networks, $2.59 billion, down 1%. Yeah, see, again, we spoke about this even with Verizon and AT&T, right? They sometimes swing these telecom stocks up and down. They put a lot of weight on the mobile sector. Weakness in the APAC. Healthy demand, North America, Europe. Net sales from cloud network services, $1.12 billion, up 8% year over year. Very nice. Growth in core networks, enterprise campus edge. Device management, service management. Heated net sales growth. Beat their estimate, okay. 493 million. Oh, that's a big jump. Net sales increased 84% on a reported basis and 85%. This uptick was mainly driven by catch-up payments, new deal wins, and renewals of previously signed smartphone licensing agreements. Top line also benefited from positive trends in the automotive, consumer electronics, multimedia, and IoT space. Net sales from the EMEA region increased. Growth in Nokia Technologies. Revenue APAC. Sales rose 20% in India due to network infrastructure growth. We spoke about this too, about the growth that we may potentially see in India over the next couple of years under the Trump administration. I have a feeling that we could start to see, again, more sales, more revenue for our companies coming out of India, and potentially deals being signed with companies based out of India. America's witnessed 11% growth. Very nice. Gross margin up to 47.2%, was sub 45%. Operating profit increased 38% year over year to about 1.2 billion. Cash flow, okay. Yeah, looking like a good quarter. Again, we spoke about, yeah, roughly 6.9 billion in cash. For 2025, in the range of 1.9 to 2.4 billion. Free cash flow is estimated within 50 to 80% of comp operating profit. CapEx is estimated to be 550 million. Solid 5G core momentum, healthy traction will be key growth drivers for cloud and network services. Okay. Network infrastructure likely to benefit from healthy demand trends in the second half of the current fiscal. Also expects largely stable sales in the mobile networks backed by demand recovery in multiple end markets. And Zacks is currently rating it as a hold. Understandable, because I guess the earnings are hit and miss, and we are in that restructuring phase. But I think we may be on the up and up, and I think this may be a little bit of too much of a low ball estimate for Nokia. Again, next earnings slated for roughly the third week of April. So we'll come back to Nokia, but yeah, technically good news, good quarter, good numbers coming out. And I just wanted to double check. Profit up. Pledge to increase investments into the data center market. Thursday, it plans to invest up to 100 million euros, or about 104 million. Oh, okay. I thought the conversion rate was higher. My apologies. So yeah, that recent upgrade to what, 520 euros? So yeah, what's that? That would be what, like $5.30, like just slightly higher. So again, that would still be right around that fib of 529, and still below that top end of the range, 5.5. With a view to driving incremental net sales of 1 billion euros by 2028. See, again, this was the restructuring that we were speaking about. We're doing, again, the belt tightening, trimming a little bit of the fat, and now we're making our investments into the data center area. So that should be good over the next couple of years. We know there's big growth, big demand. This will moderate operating margin expansion. Okay. Expects a strong return on its investment considering the momentum it already has. Company posted 81% rise fourth quarter. Okay, very nice. Yep, nice strong quarter. We're up. Okay, margins up. Yep, investments. Like, we need these telecom companies, right? Even that's why, even when I started the channel years ago, and one of the first stocks I spoke about was Verizon, just because it's a brand name, pays you a nice dividend, and that was one of the things I said too. There's a company, chances are it's probably not going to go anywhere, right? And again, I know Nokia technically finished telecom company, but again, we need these services. So that's why, we go through these little ebbs and flows potentially over the years, but again, once they see that they're losing market share or things aren't going their way for the last couple of quarters, this is where, thank goodness, the company decided to start to restructure, to upgrade Hispanics network in Spain. 400G technology upgrade will include Finnish telecom groups and interconnect routers, lower power consumption and costs. We'll also employ Nokia's photonic service switch to, oh, little whistle there for you, sorry. Utilization, okay, very nice. Very nice. Nokia to offer DDoS protection to London Internet Exchange. There's companies everywhere. Almost similar to what we saw with Rolls-Royce, right? That's what I mean. Same thing. They bring it all the way down. They take the spotlight off of it. They bring it underneath the radar. Yeah, that company sucks. It's a piece of crap. Don't worry about it. Don't even look at it. Then all of a sudden, when no one's looking, now we're signing deals. We're doing restructurings. The EPS is stronger. The margins are on the up and up. Now we're reporting healthy revenue again. Boom. Now you look at the situation and it's undervalued. And now it's on the up and up. Keeps getting upgraded. Right? Same exact thing with Rolls-Royce. That's what I mean. Started to gain, we looked at $1.20. It got up to like $2.80, $3.20. Then we started to gain a little traction. But along the way, you kept hearing, oh, Rolls-Royce gets tapped for this project. Rolls-Royce extends contract with this company. And boom, then we're beating earnings every semi-annual report and whatever. Now the stock's up at new highs, 740 or whatever. And that's what I mean. Same situation with something like Nokia. And again, we've been in this triangle technically for like 13 years. So it would technically be a little bit of a premature breakout, but with how stocks have been moving, that's why I think over the next year or two, especially if you can hold long term, I think Nokia is going to be good. But yeah, I don't want to keep going. I mean, I'm sure there was more news, but I'll come down. We'll see what else is going on. Look, so many articles came out when they reported earnings. So this goes back. Okay, January, right? DDoS protection. Nokia StarHub to boost enterprise application development in Singapore. Companies everywhere. Will act as a bridge between developers and the Singaporean telecommunications companies' 5G and 4G networks. Partnership aims to boost the creation of new applications for banking, finance, ports, online streaming, and the public sector. The collaboration also supports StarHub's goal to generate new revenue streams for its customers and maximize network asset value. There you go. There we go. We got a new president of Nokia Technologies. Okay. That's it. We got to scroll up to go down sometimes. No, you don't want to let me go back. All right. Fair enough. Fair enough. What is this? So that's February 26th. Okay, that's in about 3 weeks. European Commission has started its investigation into Nokia's bid for Infinera. It set a February 26th deadline to decide whether or not to launch an in-depth investigation. 2.3 billion, which was in June. We'll see the Finnish maker of 5G cellular antennas and other telecom infrastructure acquire Californian networking solutions provider Infinera, helping to boost the company's operating margins in its optical networks business. The companies expect to close their transaction by the first half of this year. All right, so probe into the deal. I mean, it doesn't sound like it's an issue. Guess they're just crossing their T's and dotting their I's. But yeah, that was some good news here. Again, really nice beat about a week and a half ago, coming out of Nokia. And again, it's cheap right now. It's under $5. I think it's cheap in the numbers. We could potentially have a double. They pay you a dividend to own it. And excuse me, just like you saw in the news, now all of a sudden, when everyone beat them up and took them out of the spotlight, now when no one's looking, now they're getting tapped by all of these different companies, all these different countries. And we still have deals coming in. That's why I do still like Nokia, even at these levels. But that's pretty much it. Spoke for too long, probably, so I'll end it there. Once again, Stocks by the Numbers. Thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And, of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.